Hey, welcome back to YT Finance, and today we are talking about how Li Auto has beaten both NIO and Xpeng in deliveries this month, which is a crazy development. Then we will talk about NIO stock news and NIO stock price predictions regarding support levels and resistance levels through stock analysis, so you all know what to anticipate if NIO stock surges or falls in price in the coming weeks. Lastly, we will talk about if it's too late to buy NIO stock and how NIO could have Tesla-sized stock gains in the future. Go and press the like button right now if you own NIO stock. Comment your NIO price target for this year down below. Turn on subscription notifications if you are new, and now let's make you some free money with Webull. Webull is a free brokerage app where you can buy and sell stocks, options, and cryptocurrencies. But right now, you can get 2 free stocks with Webull. You can get the first free stock, which can be worth anywhere from $2 to $250 for just creating an account, and you can get a second free stock which can be worth up to $1,600 if you invest $100 or more on your first deposit. You will have a 1 in 100 chance of getting stocks like Facebook, Starbucks, or Snapchat, and you have a 1 in 50 chance of getting stocks like Google or Procter & Gamble. To get this offer, just press on the link in my description box down below, but do it quickly because this offer will not last forever. And without further ado, let's get into today's stories. Chinese electric vehicle startup NIO fell behind both of its rivals, which are Li Auto and Xpeng, regarding July EV delivery numbers. This has been great news for Li Auto because Li has beaten NIO this month and it has beaten Xpeng 2 months in a row. NIO delivered 7,931 electric vehicles in July, while Li Auto set a new monthly record because they delivered 8,589 SUVs that can drive up to 385 miles. Xpeng, on the other hand, also set a new monthly record, but it's not enough to surpass Li Auto's numbers because Xpeng only delivered 8,040 vehicles, where 75% of those deliveries were its P7 sedan. This means that Li Auto delivered 549 more vehicles than Xpeng. However, Xpeng is catching up fast because in the previous month, Li Auto beat them by more than 1,000 deliveries, so they're closing the gap very quickly. However, when it comes to year-to-date deliveries, this is where NIO truly shines because Xpeng has delivered 38,778 vehicles, which beats Li Auto's delivery number of 38,743 vehicles, while NIO beats them both by delivering around 50,000 EVs. We will get more concrete numbers for NIO when they officially release their second quarter results in their earnings call on August 9th. To better compete with NIO, Xpeng is releasing another sedan called the P5 for as low as $25,000, which is much cheaper than almost all other competitors including NIO, Tesla, and Li Auto. This new sedan comes in 6 different versions and it's currently projected to be released in the 4th quarter of this year. After falling as much as 9% on Tuesday, NIO shares have recovered some, with the 2-month low being $38.66. It has tested $42 before closing slightly under that at $41.84. NIO stock is currently trading sideways at around $40, and its next major resistance level sits around $54.86. The reason why NIO stock is trading sideways could be due to China and the US being in a stalemate, so investors are waiting to see how things develop. China has already taken aim at their own Alibaba, along with a newly publicly traded company named DD, which has indirectly impacted other Chinese stocks very negatively like NIO and JD.com. This has even scared Cathie Wood of ARK Invest, who has personally sold off some of the Chinese stocks in her ARK ETFs. Other Chinese stocks that have plummeted lately include TAL or TAL stock, EDU stock, and GOTU stock, including TME stock prices, which are all down around 20% because of various Chinese regulations that are being implemented. Chinese stocks are naturally risky, but some of them, especially NIO, have great upside potential to them. NIO has a market cap of around $69 billion, great gross margins, with the average Wall Street analyst predicting predicting a NIO stock price target of around $55.64 as the average. NIO stock has great support around $40.48, but we don't want NIO to drop lower than $40 because then it could slip all the way down to $33, which would usher in the next major support zone. But if NIO can break above $46.89 and stay above it consistently, it could go all the way up to $54.86. NIO is already hovering between $40 and $45, so it's not clear which direction NIO stock will go, which is a good place to be, especially since their earnings are coming up soon, where we could experience some more rallying before the results are officially announced. Although NIO stock is 30% below its January 2021 highs, the stock is still up almost 1,000% since the beginning of 2020. NIO is currently making great progress towards achieving profitability, but right now it's still operating at a loss. The shares already factor in future success, but it's not too late to buy more because the stock is projected to continue to go up while the company expands its operations worldwide. This stock is great for an aggressive long-term investor like myself, so I continue to add to my position after every rally, specifically when the rally cools off. NIO is growing its EV sales at a rapid pace because the company delivered over 44,000 electric vehicles in 2020, which is a 113% increase from 2019, and this growth is clearly seen in 2021 as well. Even with production delays and a semiconductor shortage, NIO is still growing. NIO's expansion into Norway will further add to NIO's success because NIO plans to build a factory where they can reach a yearly capacity of producing 240,000 vehicles. While China is the largest EV market in the world, Europe is currently the global leader in overall EV sales, and this will give NIO the capital that NIO stock investors like us want to see. However, the company will not just be selling vehicles in Norway, but they will also be selling and implementing and installing their charging and battery swap stations along with NIO houses. According to the metrics on screen, NIO as a company and Tesla as a company are performing very similarly, which is great news. And this also means that NIO is just a less expensive Tesla, which means that NIO actually has more growth potential in the short term. Now, both of those EV companies are absolutely great, and both of them are technically overpriced compared to their current fundamentals, but they are based upon future performance, not current performance. But if you would like a cheaper version of Tesla, NIO stock is always a great option. However, Tesla has their hands in so many different types of technology. In the long term, Tesla will probably be a better play. But you really can't go wrong with either of them. But what do you all think? Comment your thoughts down below. Remember to hit the like button right now, subscribe if you are new, and I will see you in the next YT video.